And I'm here with Fritz Henderson, the CEO of General Motors, talking about the quarter. Fritz, welcome.
Good morning, Greg.
Fritz, when we look at these numbers, you had about a $260 million loss on an EBIT basis. That's earnings before interest and taxes, only a $1 billion on an annualized rate. Is GM ahead of schedule as far as a financial turnaround?
First of all, those are a couple of words, Greg, as you see in the release. These are managerial numbers, they're non-GAAP, and it's for a period from July 10th through September 30th, which is really the new GM. But if you look at it relative to the plan that we set forth in the bankruptcy, yes, we're ahead of that plan. And not only ahead of the plan in operations, but some of the contingencies that we provided for in the bankruptcy, we've been able to manage so that they haven't been realized. So I think in a number of cases, relative to the bankruptcy plan, we are ahead of schedule.
At the same time, you said that liquidity is going to fall significantly in the fourth quarter. You're going to have negative cash flow. What's going on?
Well, importantly, we ended the third quarter with $42.6 billion of cash. We generated operating cash flow in this July 10th through September 30th period of about $3.3 billion in the third quarter. But I think what we wanted to do is highlight for investors and for you what was going to happen in the fourth quarter. The Delphi reorganization was completed, so our portion of funding for that, which is about $2.8 billion, is going to take place in the fourth quarter. We have a one-time adjustment associated with changes in payment terms of about $2 billion. So we tried to articulate, Greg, what are the factors which will tend to depress or lower that cash balance at the end of the fourth quarter. But even with that, we felt confident and comfortable that we could begin repaying both the U.S. and the Canadian government back early.
That's one thing that really struck me there, is that how can you have falling liquidity, negative cash flow, and then really accelerate the pace at which you're going to pay back the U.S. $6.7 billion and also other parties?
Well, I would say, Greg, you have to get underneath the numbers and understand that some of the factors which drove the third quarter were the third quarter cash balance to $42.6 billion were unusual. At the same time, some of the factors that are going to affect the fourth quarter will be unusual or one time. So, I mean, I think if you were to set the bar and look at where we think we're going to be at the end of the fourth quarter, we feel that we'll have a liquidity position which will allow us to comfortably manage the business, reinvest in the business, get the job done, and begin to repay the U.S. and the Canadian taxpayer. When
you look at the market, the U.S. market, the global auto market, just how much has it improved, let's say, compared to 2-3 months ago?
The seasonally adjusted annual rate in the U.S. was 10.8 million units in October. November feels today a lot like October, which is what we thought the exit rate needed to be from the fourth quarter in order to look at let's say, 11.5 million unit industry next year. Certainly relative to, I'll call it September, it was encouraging. We felt that September was going to be depressed from the payback for the Cash for Clunkers program. It was. We felt that the impact would be sharp but short, and it was. So, I mean, I think it's still a challenging environment no matter how you look at it, but nonetheless, there's some signs, whether it's stimulus, whether it's return to credit, whether it's, excellent offerings in the market that we think we can see the beginning of improvement next year in the U.S. market.
Fritz, are you going to need help from the European governments to finance the turnaround of Opel, which you've decided to keep? Are you going to ask for money?
Yeah. We are in the process of repaying the bridge loan we'll have it fully repaid by the end of November. We are finalizing our plan. Basically, we have taken it, made refinements in it. We're engaged with Labor, Works Council, the European Employee Forum in order to finalize that. At that point, we would present our plan. We certainly have the capability to finance our business in Europe, but we would prefer, and we are going to make a presentation, make presentations, if you will, to ask for support for our European business, and we'll have to see how that goes. But that's certainly our expectation.
Fritz, we got about 45 seconds left. How long is it going to take for you to turn Opel around from huge losses, just buckets of losses, to a profit? What, 1 year, 2 years, 3 years, what? About 40 seconds.
Oh, I would say in 40 seconds, it's a 1 to 2 year process. It's not a 6-month process, but nonetheless, our product cadence, our new Astra is being launched. The Insignia is still doing well. We have a Mariva that's coming at us. So, I mean, the product cadence of our European business is excellent. But we think it's you're talking about a year, 2 years at least. Actually, 2 years at the outside. But that's the kind of time frame we would have.
Fritz, we got to go. I want to thank you very much for your time. Hope to talk to you again soon.
Thanks.
There you have it, Fritz Henderson, the CEO of General Motors.